Boris, great to see you. First up, the trade on Tyson. Your thoughts?
So Tyson actually getting hurt more on beef rather than chicken. The problem is that many investors feel that consumers are really tightening their budgets and moving down from beef. Since 36% of Tyson's revenues comes from beef, that's where they're getting hurt. But I think at this point, the stock is really beaten up, and it's almost like throwing baby out with the bathwater. Unless you think there's something inherently wrong with Tyson, which is one of the preeminent food producers in the world, I really like it here on a longer-term basis, although the stock can certainly just basically wallow at these prices for quite a while. So I think, if you want to be an investor, you probably want to be a little bit tactical. One idea, possibly, you can sell 60 puts, which will give you a 57 basis in the stock all the way till April of 2023. And then actually gives you at a very, very good price at about a 3.3% dividend, and you can just simply wait until the macro picture improves. But generally, I think the stock has gotten so badly beaten up at this point that it's more of a buy than it is a sell.
Let's talk about Wynn Resorts. Is a renewal of gambling licenses in Macau enough to power the stock as it is today?
This is really, I think, a value play, right? I mean, there's lots and lots of parties that seem to be very interested in Wynn purely from a value proposition. As you said, of course, yes, there's only 6 Macau licenses, and Wynn gets one of them, incredibly valuable asset. Given the fact that Macau is actually 5 times as large as Las Vegas in terms of, I think, betting at this point. However, there's just an enormous amount of risk also because, zero COVID, everybody's been hoping Macau comes back, but that may be put off for quite a while. On the other hand, there are a lot of parties, including the Houston Rockets owner, Tilma Fertitta, and there's rumors that LVS is interested in the property. Bottom line is some analysts think there's about $95 value in Wynn. It's trading at 73. So I think it's probably a very interesting value play at this point, given going forward.
Okay, final name, Activision Blizzard.
Well, I've been bullish Activision many times on the show. I love the stock. I think, I think the whole gaming industry is actually very, very strong. Now, the story with Activision, of course, is there's this fear now that the Microsoft deal does not get done. But I think there's a bigger story here that even if it doesn't get done, Activision in and of itself is a really great play this year. First of all, if the deal doesn't get done, they get a $3 billion breakup fee. So that just simply adds to their cash flow. Secondly, they have 2 very big, Call to Duty coming out in 23, and I think Overwatch, right, too. So both those titles are just expected to be huge at the box office at this point. And of course, the box office in gaming is much bigger than the box office in Hollywood. So I think you just have to be secularly bullish this stock from every angle. If the deal with Microsoft gets done, it's going to be a cherry on the icing on whatever, I forgot the expression, icing on the cherry on the icing on top. But bottom line is, I think Activision in and of itself, aside from the Microsoft deal done or not, is a great stock going forward.
Okay. And finally, Boris, I just want to get your take on stocks in general right now, starting this week lower. We're poised for gains for the month, though. Given all the geopolitical and macro headlines that have been moving things here in recent weeks, your take?
You feel me biting my tongue at this point. It's really hard to be confident one way or the other. I've been relatively bullish. I thought the inflation story has done, and I thought we would get a lot of support. But of course, the geopolitical risks are just, I think, the greatest unknown, both in Russia and in China. And that is one thing that's just impossible to predict. I think overall, if things kind of calm themselves down geopolitically, we're in very, very good shape for stocks to rally. But that is the big unknown. That's why the risk factor in the stock market still remains.